Hey everyone, it's Ed Conarchy back with Conarchys Corner. Just wanted to bring everybody up to date on a couple of things. I want to go through specifically the Homebuyer Tax Credit information that we went through. If you go back to Conarchys Corner dated November 13th, we went through the new Homebuyer's Tax Credit that was announced by the White House on November 6th, stating that November 7th and forward there were new rules, higher income limits, so that even more people could take advantage of this write-off. Most importantly, there was a new add-on that was put into it, and that was for move-up buyers, someone who has actually owned a home. Remember, before this, the credit was just for first-time home buyers. But as of November 7th, when that was enacted, now a move-up buyer is allowed, if they can demonstrate they lived in their primary residence, their current home, for 5 consecutive years out of the last 8 years, that they can buy a new home and get a credit for it. The question was, did they have to sell the old house? We found the answer. We searched the IRS website high and low and was able to find out that no, you do not need to sell your current house in order to get that $6,500 tax credit. So someone who lives in a home today that wants to buy a new replacement home, a primary home that will be their house that they're going to live in, you can't buy an investment program and get this credit, or excuse me, an investment property and get this credit. This has to be specifically for the purchase of your new primary home to replace your current primary home that you've been in for 5 consecutive years out of the last 8. So this new primary home, can you get the tax credit even if you don't sell the old one? Like I said, the IRS, we searched it high and low, says yes, you can still get the $6,500 tax credit. So you could actually buy a new home, close on it before the sale of your old home to receive that $6,500 credit. Remember, there is income limits on this. They are higher now, which is the good thing. Most importantly, there's also a house limit. You can't do this on homes greater than $800,000. But here's the catch. Should you do this? Meaning that yes, the IRS is going to give you a $6,500 credit to go out and buy a new home to replace your current primary house. Should you do this? Should you close on a new home before you close on your current one? And I say, hold on. And don't put yourself into a position where you could find yourself at great risk. My favorite saying when it comes to this topic is, would you double down in this marketplace? Would you take on double the risk with what's been going on with home values over the last 2 years? And most people I've said that to have said no, that they wouldn't do that. And that's my point here, that we've got to make sure that it makes financially sense. I don't want to get tempted by the $6,500 check only to find out that you're owning 2 homes, 2 mortgages, 2 utilities, 2 maintenance fees, 2 property taxes, 2 homeowners insurance policies, all doubling your costs. That puts you underwater because you can't handle it. Now financially, if you can handle that, and you can handle it for an extended period of time, that's one thing. But with most people, I find it's tough to handle 2 sets of everything for an extended period of time. And you could have that situation in this case where you could have it for an extended period of time, depending on how fast your old home can sell. So the important news is, yes, you can move into the new house to take advantage of the $6,500 credit before you sell the old house. The point here is, should you? Each individual circumstance has to be looked at, and we have got to do a custom approach to your specific situation to know if it's the right thing for you. So obviously, let us know your situation, what you're kicking around, what you're looking at, and if it makes sense, let's do it. Now, if you're thinking of selling, do it. If it's time for you to move up because of your family's growing. We had a person that we're helping today that it was time for her to move out of her home and get into a maintenance-free living environment. And she's at that age where she wants to do that. And she was able to sell her home, get it on the market, and sell within weeks. And what's great now is that now that that home is sold, she can go out and look at new homes without any risk of having to worry about 2 mortgages. And she's taking full advantage of the $6,500. So this is the time to be a home buyer. With the great inventory that's out there, a lot of homes, with the low sales prices that are out there, with the tax credits that are out there, and most importantly with the historically low interest rates, it's the time to do it, but we've got to make sure we do it smart. So again, just to clarify, this is a follow-up from the November 13th Conarchys Corner, and make sure you check that one out because this will go through, and that one I go through all the specifics of all the changes with the Homebuyer Tax Credit and the Move-Up Buyer Tax Credit. But most importantly, on the one question, can the move-up buyer get the $6,500 before they sell their old? The answer is yes. The question of should you is a whole nother question. Make sure you give us a call or email us with any questions on that and specific situations that would be specific to your situation, I should say, and customize that approach to advise you what's right for you. But that's our advice for this week. Thanks for joining us on Conarchys Corner. If we don't talk to you before the holidays, obviously have a wonderful, happy holiday. I hope you had a great year, and here's wishing to you for a wonderful 2010. Any information that you need at any time, just let us know. Happy to help. Take care.